Okay, welcome once more to our weekly market outlook. So where we look for trade opportunities for the week. And starting off, before we begin, definitely want to put out a risk disclaimer. You know that this is the trades and ideas we consider here for educational purposes. So when you want to ensure that you use proper risk management in your trading, you want to ensure that you use proper risk management in your trading, and you also want to ensure that you manage your trades properly. Okay, so as usual, I'm going to be the host. My name is Nana Alexander. I'm senior market analyst and a professional trader myself. Okay, so we'll look at an overview of the market. We'll look at some fundamentals. We'll look at some trade ideas, and here are some currency pairs we'll be definitely looking at, which I quite like their setup. So GBPUSD, USDJPY, EURUSD, and gold, as well as USOIL, right? So without wasting any further time, let's jump over and look first into the fundamentals. Let's look at the weekly major reports that we are expecting. So if you go to forexfactory.com, okay. So if you go to forexfactory.com, let me just share that once more. I'm going to share my entire screen. Yeah, so if you go to forexfactory.com, what I like to do is filter out the report, so I can only pay attention to medium to high impact news. So if this would just load up. So I can only pay attention to medium to high impact news. What you see here, today being Monday, January 17th, we have 3 news, although from China, more or less. So they are pertaining the Chinese one. Their GDP reports, the retail sales, the core retail sales, and then the Bank of China Business Outlook Survey. So you can see on the right here where we have the forecasts and the actual value. So the report for this is out. It came out better than expected. And the report for the retail sales is also out. It came out worse than expected. Now, personally, I don't trade the one, so this doesn't really affect my trading because I don't trade the Chinese one. However, the Chinese one, what happens to the Chinese one, you can look for indirect correlation. So for example, the Aussie and the yen, a lot of their business is done with China. And so depends, for example, if their GDP is stronger, it probably means it's probably good for the Aussie, in the sense that since they do a lot of trade union together, a lot of trades between themselves, and that will facilitate some of their trade. But beside that, directly, it just affects the one. Now on Tuesday down to Friday, we have quite a number of reports. On Tuesday, we have the BOJ market outlook, that's the Bank of Japan, the monetary policy. So a lot of reports from Japan, that's where we'll be looking at some press conference release and the outlook report. So the monetary policy statement would have a lot to go on whether the markets, favors a more hawkish or a dovish move. So remember, the yen, the Japanese yen, is usually considered a safe haven currency. And that's why, if you notice, last week, the week before, we've been having a very strong yen, with the dollar getting a little bit weak, right? So when the market senses risk of, risk on, they usually tend to jump on the yen. Usually, sometimes the dollar as well, but mostly the yen is considered a safe haven basket. So you'd also want to pay attention to. So things I want to pay attention to is actually on Wednesday, with the CPI reports from pound, and also from the Canadians, because from Canada as well, because this will definitely have some impact in the movement. So if you're trading, if you're considering trading these pairs, you're going to expect more volatility at this point. You definitely, except you're a news trader, then you probably want to try and trade this. Otherwise, you just want to pay attention to this time, so you don't have your open positions, run into, or at least you want to manage your trades properly around this region and see how the report comes out, and then try to trade based on your own system. So that's on Wednesday, and then on Thursday we'll have lots of unemployment reports from the Aussie, and then we'll have the unemployment claim and the existing home sales from the US as well, before we wrap up on Friday. Sorry, please, can you please mute your mics? Don't unmute your mics, everybody. And then on Friday, we'll wrap up with a few reports from Canada and as well the UK. So with that in mind, what I just want to highlight. What I just want to highlight is mute your mics. And so what I just want to highlight or keep in mind is on Wednesday morning and 2:30 reports from GBP and CAD, and as well on Thursday the Aussie reports. What's this? Okay, now let's jump over to the charts and then look. Remember, we pointed out that we're going to be looking for top trade idea for the week: the pound, USD, dollar, yen, the the euro, dollar, and gold, as well as US oil. So let's jump over and start from there. So let's begin by looking at the pound USD. So before I even do that, I'm actually going to, as usual, take a quick look at the dollar index, the DXY. I always like to see the structural play in the DXY, and since it measures the strength of the dollar against the major baskets. So you can see clearly that, the dollar has been weak for a couple of weeks, right? But structurally, the long-term play, the market's outlook still looks a lot to the upside. So here's what I mean. You can see the markets making clear higher highs and higher lows. The structure, structure is one thing I always like to pay attention to in the market, because this sets the tone. You can see the market clearly making this push to the upside. Now, as long as the market continues to stay constructive this way, I have to respect the fact that buyers are in control. And until we see sellers clear this low price here, then buyers are in control. So what I like to do is I like to play the structure, and I like to focus on what price is doing and how I can take advantage of that. So with this said, I don't trade the DXY. Can't really trade it itself, but I like to measure, look at it, because it can tell you a story about what the dollar is going to do most likely next. So potentially we are at the level of demand, last down move before up move. So if you're a Wyckoff trader or a smart money trader, you're probably looking at this and been looking for some kind of break of structure in the lower time frame here to see the DXY start rising up. Now, so with this in mind, what does this say? What am I looking out for? Well, I'm looking for a stronger dollar, right? Now, just because we have a stronger dollar doesn't mean it to be strong against every single pair, but relatively speaking, a much stronger dollar. Okay, now let's look at the pound USD, which is the first one we have on our list. So the pound USD, this is a quite interesting one, right? So personally, from a just a structural point of view, you can see the market is clean. So here's what I mean. You could see why, we had this big push to the upside. So this up move all through here. I'm just going to use this line to identify it. So we had this big up push. The market is clearly in an uptrend. However, the market tapped out at this highs here around 1.4255 and made an equal high, actually slightly lower high. And since making this lower high, this tends to become what we call protected high. And you could see the structure. The market has been making lower lows, lower highs, lower lows, lower highs. So structurally, the market is still looking bearish. Now, even though, so let me zoom in. Now, even though since making this low, we've almost rallied up back in a straight line, right? Sorry, can you please mute your mics? So even though structurally we've had this straight line move up, the market, the bears are still in control as far as I'm concerned, at least until we see a break of this protected high here. So until we see the market take out this high, the more than likely scenario is that we're going to come down and take out the liquidity laying at this low. So this is more or less the outlook. Now, doesn't mean the market has to start tanking here. The way I like to trade is all about storytelling. So I like to look for what is the story and how do I expect the market to deliver to me based on that. So what structurally, with that bias in mind, then I like to use something kind of like a 3-box setup. So I look for structure, structure in the market. This is the last impulsive move downward. And so I like to make this blue box structure. Now, if this is the structure, this is the impulsive wave down. Now, this push back up is supposed to be the corrective wave. Now, ideally, if you're a Fibonacci trader, you probably draw your fib from A to B and expect the market to react from one of these levels. So if we pull up our fibs, and do this, okay, so this is my Wyckoff fib. I'm just going to change this to normal fib. So regular fib. Now, so ideally, you'd expect the market to find resistance in this case at one of the golden ratios, so 38.2, the 5.0, and the 61.8. However, there are also levels like 78.6 and the 23.6 as well. So as you can see, the market just, the market has tapped into the 78.6 fib level and is reacting. Now, I don't necessarily trade fib level this way. I am more of a smart money trader. At least that's the way I like to, I'm trying to trade more often right now. So I like to look for areas of demand or supply, a point of interest. So if you can look, if you notice here, I have this red zone highlighted. It's more or less the last up move before the down move, where smart money was, bought a lot of lots in order to push the market down. So there are a lot of unmitigated positions here. And so I'm expecting, that was why I had this drawn out here. Now, so with that story in mind, we have, this is the impulsive move. Ideally, the market should stay below this high. So this is supposed to be the protected high, this one up here. So unless the market takes out this point, I have to expect that price will come back down. And if price starts coming down, where is it likely going to run to and try and take out the next liquidity? Well, based on this structural bearish market, we're going to likely see the market come down to try and take out this low to continue to move downward. Now, there's nothing guaranteeing that will happen, but you have to have a story and then try to play out the story based on your own system and obviously try and manage risk. So we'll have a story. We are looking for the markets to continue the downtrend. However, we need some kind of confirmation. Now, there are a lot of ways you can look for confirmation. You can look for Wyckoff distribution. You could look to see for price action, candlestick formations, and fib levels if you do those sort of things. So clearly here we have a bit of those. So you can see on, I think, Thursday's candle, the market rallied, right? Rallied up, and then sellers were able to clear price and more or less form a bearish pin bar. Now, Friday's candle also, rallied and took down that structure, went up to about the halfway of the pin bar and made another bearish formation. So clearly, if you're a price action trader, this is a clear, more or less structure. So this is a double pin bar setup. You can look to execute this just the way you like. You can look to, trade the 50%, put your stop loss above the highs, and try. So ideally, long term, you're looking at coming down to these lows. Now, it doesn't mean you wouldn't partial out along the way, try and take profit as the market is going your way. But you have a story, you have a bias, you have confirmation, and you look to trade it. Now, if you're personally, how I was actually looking to sell this, actually been selling this from Friday. You can see if you go down to the lower time frame. So we're on the 45-minute chart. You can also do the same thing on the 1-hour chart. You could see how structure shifted. The market was making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows until this point. So it made a higher high. It failed to make a new higher high and then took out this low, right? So when it did take out this low, I was looking for the market to establish a new lower low to then take out the liquidity resting below here. And sure enough, that was what happened. So I had this sell from around this area, literally from this area here, and took some partials here and allowing the remaining room. Now, what am I looking out for now? Short term, where I'm looking to see if we get a rally back up. So in the spirit of structure, high to low to lower high, sorry. So let me do that again. So high to low, the market made a high here, made a low, made a lower high and a lower low, and then made a lower high. So from this new low, at least we're expecting the market to make a new lower high from around this region, not taking out these highs, then continuing lower. So that's what I call expectancy of structured delivery. So this is how I expect the structure to deliver. And if it doesn't, then it negates the trade outlook, and I'll look for the opposite of it. Now, that is one. You could also consider this a bearish flag. So we have this flagpole. The market is, kind of trading within this channel. If we break below the channel, that would be more like a bearish flag. And then with flag setups, the market tends to rally the same length as the flagpole, and so you could do the math. So let me explain that. So this would be our channel for the flag, something like this. And so, sorry, please, can you all mute your mics? Who is? Okay. So this could be the setup. Personally, I'm looking to see if maybe we get back up to this zone. So I'm looking to see if we get back up to that zone or this zone, which is kind of like the last up move before the down move. So if we get into there, I'll be looking for some Y curve distribution to try and take price lower. Okay, so that is on GBPUSD. I'll be explaining a lot of this on the cutting-edge trading room. I'll be looking for trading opportunities on how to try and take this essentially back down. As long as price continues to stay below this high, we'll be looking to try and trade this back down to this level, maybe even lower. Okay, the next we have is I think EURUSD. So let's look at that's the EU. So EURUSD is also a very interesting one. Now I have a long-term outlook on this, short-term outlook on this, and I'm going to try and manage it appropriately. So you can see how we have this missed pivot here. So we have this I call imbalance here, where the market failed to mitigate positions here. So what I know for a certain is this: there are a lot of millions of others, millions of lots actually sitting here where smart money or institutional traders had to, were unable to get in or get back in. So mitigation, more or less, that's what I'm looking at. So we had this, you can even call it this entire zone here. So let me maybe adjust that a little. So you could even be considered as this entire zone. So we have this pocket, price pockets here that the market usually likes to trade back to. When you see unmitigated pocket like this in the market, it doesn't matter. It might take a long time, but the markets always fill them. So here's what I mean. You can see how the market left pockets down here. After moving for a while, the market definitely has to come back and fill back those pockets. It's more like offering the market price fairly across the board. Now, so there are a couple of outlook to this. There's a technical way you're looking at a trend line break, which we seem to have gotten. So you can see how we have this touch here, this touch here, this touch here. So this trend line held. And now we're looking above this trend line, I think, on Wednesday candle. And like I like to mention, when you see trend line break, it's usually followed by a retest before a potential continuation of the trend. Now, on this one, we retested, and we already, you can see price is reacting around there. Now, this doesn't mean that we could not see price, come back down to this region. You can see I have these areas here highlighted, and the reason is this. So we have this Y curve accumulation down here. So the market made the ST. So if you understand Y curve, you know that we have our preliminary supports here. We made our selling climax, made our automatically, did our ST, the STB, and then we have the sign of strength, which then come back into the last down move before the up move, before you see this push. So looking at structure, so you might not see this clearly, but if you go to like the 4-hour charts here, you'd see you see the structured delivery clearly here. So you could see what I mean, where the markets, okay, not there. So we had this, push up, which was like the sign of strength. The market came down. We tested the last down move before the up move. And so far, you could see how price has been delivering higher, right? So we had this push, so more or less, I'm just going to call this one straight move, right? Now, usually, ideally, you always see the market push back down to go up. The market always goes down to go up or goes up to go down. Is how price delivers. So these areas you see me highlighted here, these red boxes, I'm kind of expecting price to maybe come and tap into one of these zones, either this or this, before continuing the trend up. What is the reason behind that? Mostly because of just structured delivery, which I will be discussing a lot on the client-only trading room. So make sure you join me there. Remember, to be there, you always need to have your account funded, so you can have access to that class. However, that being said, I'm looking to see, probably we have price come back down into this area. This is strictly based on smart money trading. Based on technical trading, we kind of seem to have confirmation, because we have come back to tap the backside of the trend line, and potentially we'll be looking to go long. But so based on my storytelling approach to trade, which I seem to be applying more, this is the last impulsive move upward. And then we're looking to see if we push back down into one of these retracement levels to try and take back price up. So if we come down here, we're looking to see if we get some kind of Y-curve accumulation, on the lower time frame to try and take this back up to clear liquidity, because smart money is always targeting liquidities because that's how they get their orders filled. So EURUSD, I'm bullish, I'm bullish on EURUSD for the week. Pounds dollar, I'm bearish. And let's see, what was the next one we had there to look at? EURUSD, pound USD. I think we had gold. Yes, so we had XAU USD. And okay, so let's look into this. So XAU USD, top-down analysis. What is the market saying? Well, so if you zoom in, one of the things I always like to do is zoom in so I can see price delivery. So as you can see, we had this big push upward. We are stalling more or less in this range, something like this, where price is more or less ranging, forming kind of a wedge pattern, more or less. However, even within this wedge pattern, you could see the delivery of price is slightly more bearish than it is bullish, right? So you could see, making lower lows, lower highs. Even though we're not making lower lows yet, we're also making lower highs. Looking at price delivery here, you could see that price is much more or less trading downward. Now, so what is the expectancy? So if I zoom in here to try and look into this much often. So here's the thing. We had this push down. So this structural break is one thing I always like to pay attention to. So where the market breaks structure. And how does the market break structure? Well, it breaks a bullish structure when it takes out the lows. So in a bullish structure, the market should continue to make higher lows. When it makes a lower low, then potentially that structure is being taken out. And then in the bearish structure, when it takes out the high, because in the bearish structure, it's supposed to be making lower highs. But when it now takes out the high and make a higher high, then potentially you're looking at a change of structure. So we had this last protected low here, which, so this last protected low here, which you may look at it and it looks like market, it's not the cleanest of takeout. So what I really like to see most of the time is I want to see price close below it, right? This can just be liquidity grab where the market just push down, clear out people who had their stop loss below here and then continue to move much higher. But you have to respect the fact that the market has taken out this low. So basically, looking at this one, I'll be looking for, much stronger confirmation even before taking a trade. Now, mind you, all of the things we've discussed here, just because we have those outlook, you need to confirm, you need a way to confirm your bias before executing a trade, because it's your confirmation that will enable you to have protected stops, have a story behind where your protected stops should be. I'm not going to go into a lot of those details here. I'll be doing a lot of those on the cutting edge trading room, so you already know what to do. So based on this structural delivery, based on our storytelling idea, we had this, so we have this blue box, more or less, and then we are having this retracement back up. Now, within this same structure, we also have another structure, so it's more like a snowflake effect. The market is actually fractal. Sorry, the market is fractally stable. I don't know if that's even correct. But what I mean is, you see the same setup. So that you're looking at a daily chart, a 1 hour chart, or even a 1 minute chart. The market price will still quite deliver in the same system, right? So looking at this, why this is the bigger structure and why the market has come back up to kind of fill partially this pocket. So remember what I talked about, imbalances in the market. The market left this big imbalance here, and we've come back down and fill it. However, we've not completely filled it because we also have another imbalance here. So based on this structure, the area I'm looking for to see for potential sell is up here, right? So I'm going to just make this POI my point of interest. And so potentially we could see price continue to grind its way back up and get into this zone. So when we get into this zone, that is where I'll be looking for confirmation in the form of Y curve. So I'm looking for confirmation in the form of Y curve, in the form of price action system to try and take this back down. However, the market may not get up here yet, right? If this is the structure of its own and the market has come in to tap into the last up move before the down move, we could see this push back down. But I'm going to not try and call it. I don't like to frustrate, so I'm going to try and see if we can get this to grind its way back up to this area and then look to trade this back down. Okay, now I think we have Europe. What other pair do we have? I think we have USOIL to look at. So let me just go back to my presentation slides. So we're going to look at, so we've done pound dollar, euro dollar, gold. So we'll look at yen, dollar yen, and USOIL, and they'll call it a wrap for this class. So USDJPY. So USDJPY. Now, remember when we looked at our dollar index, we said we're more likely than not, the market is more inclined to go higher because of structure. And so you see in EURUSD, even though EURUSD bullish, that means I'm expecting the dollar to get weaker. In pound dollar, I'm much more bearish. So a dollar strength would very likely favor the pound because of the structured delivery. Now, so on USDJPY, same thing, you can see price is much bullish. So you can, here's what I mean about the price took out the previous structure. This was the previous high. The market has taken out that previous high. And so what is the price doing now? When the market is coming down to balance out, when the market moves a distance, it usually comes back and finds fuel to move the next distance. So we're now looking at, okay, where do we get momentum to continue the trend? Now, as long as price stays above this low here, definitely we're expecting price to go up. Until price takes out this low, this market is, no matter, I don't care what anybody tells me, we're looking at a bullish structure. The market is more likely to go higher. Now, but we need to find a way to be participants in the market. And I usually, my preference is usually either technical price action around key areas or Y curve accumulation or distribution. So then what are the key areas I'm looking at? I'm looking at this zone here, this zone down here. And the reason is this: if I go to the 4-hour chart, so if I go to the I think that's the 4-hour chart, So if you go to the 4-hour chart here, this whole structure, this whole down move here is, you can see we have imbalance here. We had this missed, what I call it, pockets where the price gapped out without offering price fairly across board. So more likely than not, I quite expect price to maybe find its way back down, especially because this is also very close to an SND zone. That's this area of demand. So what we could likely see is this. So here is, so where's my pattern to? So you could see on the lower time frame, remember we have a higher time frame bias, right? On the lower time frame, structural delivery is also lower. So you can see this is what I mean. Price making lower lows and lower highs. And if you've been able to find a way to participate, well, good for you. Now this is the next low. Now on the lower time frames, the most likely than not bias is we are going to find resistance or find demand and then take price lower. So we could do that around this area. Maybe we try and fill these pockets here before going down lower, or or this could just be the end of the retracement and you could see price push back up. So what I would be looking out for is some sort of confirmation, because I want to be a buyer in this market. I actually don't want to be a seller, right? But I would rather be buying down here, right? Now the market is currently at this point and I'm not going to force the trade. However, I'll probably find a way to participate once I start seeing structural shifts on the lower time frame, where price is now making clearly higher highs and higher lows. I'll find a way to participate to try and clear out the liquidity at the top. But more likely than not, I still believe we'll probably find price find its way back down before eventually, if the market wants to hold bullish, continue to go up. So once we get ourselves down here, I won't just start trading it. I'll obviously be looking for confirmation. So confirmation in the form of Y curve, in the form of maybe structural shifts, fractal shift in the market, and maybe price action, rejection candlestick setups. Okay, so that is the outlook on USDJPY, and last but not least, US oil. So this has kind of like a direct relationship because the US oil, the Canadian or the CAD, right? The CAD is directly proportional in most cases to the to the oil, because it's one of their major, they are kind of like a commodity-based currency. So if the price for crude oil is rising, you see the Canadian dollar doing very well, and when the price is falling, you see the Canadian dollar, suffering as a result. So based on structural delivery, still, the story behind the markets, long-term markets is bullish, making higher highs and higher lows. Now, you might have several reasons for feeling, the energy sector, Tesla and all of those things, but until price starts actually agreeing, you have to respect price is king, right? So you can see we'll be making higher highs and higher lows. So what am I expecting? Now, here's the thing. Here is where a lot of people get slaughtered in the market. Especially, technical traders. Most times we're looking at this, right, as, so if you have, where's my trend line? So something like this, you look at this as support, right? So, resistance. However, if you zoom out a little bit and look at price delivery in terms of structure, you'd see that in failing to take out this low here, right? In failing to take out this low here, more likely than not, price is going to clear this high. Now, you have a lot of people trying to call the tops. Okay, you have people highs here and all of those things. And sure, fine, you can obviously get into some trade, short term, maybe on the lower time frame, get in and get out and make some profits. But long term, in terms of this area holding, it may hold, sure. I'm not a wizard, I can't tell the future. But just simply looking at price delivery, we'll probably likely see the price for crude oil probably go a little bit above $90 per barrel. I know most people will probably be looking at this and be expecting that we're going to find resistance and push back down. We might have that, but however, based on price delivery, based on structural delivery, More likely than not, I am more inclined to feeling would have this rejection from here, would fail to have this rejection from here, and then take price off. So this is where, so if you've probably heard of anything, because if you've heard of, where you hear people say, I hear traders say smart money is targeting, key areas where a lot of retail traders are looking at. So retail traders are looking at this and are going, well, this is a double top here. Price is coming to probably from a triple top. We might, this is an area I should sell. We might have a bearish candle rejection, and then what will happen is most people will start getting involved, and price will just shoot back up and take out all of those people before eventually coming down to make the next move. Now, I know the market is overstretched. I know that one for a certain. The market is overstretched and is due for a retracement, but it doesn't have to retrace. There's nothing saying it has to retrace now. It may go up, take out this area, clear out everybody's, all retail traders looking to position their risk, the stop loss above here, and then come back down to find the retracement to continue the next leg higher, right? So, so on this one, on US oil, if you're looking to sell, wait for proper confirmation, and then definitely try to manage your trades properly. So if you're looking to sell, let's say on the lower time frame, if price taps into this zone, find a way to manage your trades. If you're obviously, you shouldn't be looking to buy because price is extremely high, but just expect that we could see price slide above this area, close well above it, and then I'll be looking to see, do we get a pullback? When we get that pullback, to see if we can continue the run upward. Okay, so we have covered everything we have on our list. So going back to it, we have GBPUSD. Our bias is much we are more inclined toward seeing this pair drop. So bearish bias on GBPUSD. USDJPY, I have a more bullish bias, even though I can see a slightly, some retracement, some pullbacks required to get into the zone I'm looking out for, but I'm not looking to trade that. I'm looking to see if we can get into the area I like and then try and take it up. EURUSD, I also like long, so bullish bias. Gold is also one I have a bearish bias on, and US oil, I'm quite neutral. And the reason I like to pay attention to US oil is because you have good, I can, based on what it's doing, pairs like Euro card, pairs like USD card, pairs like AUD card, you can have some quite volatility there that could give you some nice profits. Okay, so that is all I can take for now. Today's class is just simply market outlook and top trade side there. I think somebody has a question. Or somebody asked me to check out USD card. Now, I wouldn't be able to do much checking out there. Remember, most of the classes where I, more or less answer your questions, like those questions are on the cutting edge trading room, where we would look at all the pairs as much as we can and try and, figure out how we can trade them. But just quite simply, let me just, so USD cards, still the same thing. I'm much inclined toward a strong dollar. However, I also understand that we could be looking at a potential strong card, depending on how the US oil reacts to current area. So looking at this structurally without any prior bias, it's quite ranging. So we had this bullish trend here, then we had this pushback, which took out this structure here, and then we took out the structure here, and now we've taken out the structure here. So it's all fumbled up for me right now. If there's anything I'm probably looking for is to see if I can find, I'll find maybe some like of accumulation setup here to try and go long, but it's not one of my favorites right now because of where price is. I'm going to be interested in this. If we see price down here, that's probably where I'll be looking to maybe get interested in trying to find trade opportunities. But as to where it stands now, it's a no-no for me. Okay, so any other question? Does anybody have a question? So, okay, I'm going to stop the recording now. I hope you enjoyed the class. I hope we're able to pick out a thing or two. And remember, it's not just about, it's not,